Okay, so I know we're all busy, so here's a quick overview of what we're meeting to discuss. Now, before we delve into the opportunity, let's discuss what some of us are already thinking. Cryptocurrency, is that Bitcoin? Yes, Bitcoin is a cryptocurrency, but there are also others. I know some of you may also be asking yourselves, well, doesn't the price crash all the time? Isn't it really volatile? And my question to you is this. Do you consider a price increase from under 1 cent for a Bitcoin to today's price of over $8,115 in a time span of 10 years crashing? I'll allow Alex to illustrate my point.
This one time, Bitcoin went from 6 cents all the way to 36 cents, and then it crashed down to 21 cents. And then another time, Bitcoin went from 85 cents all the way to $29, and then it crashed to $3. And then another time, Bitcoin went all the way to $213, and then it crashed all the way to $70. And then another time, Bitcoin went all the way to $1,100, and then it crashed all the way to $239. So the moral of the story is don't buy Bitcoin because you know it's going to crash again.
See, now, the irony of that video, which is it's a common joke within the crypto community, it's a parody basically, is that it was actually released on the 26th of June 2015. So that video actually came out before the 26th, before the 9th of July 2016, which was actually the Bitcoin halving, which means that the video was actually shot before the 2017 bull run that saw Bitcoin go all the way up to $20,000, over $20,000, and then crash to a higher low, if you will. You see, cryptocurrencies, like all markets, are cyclical. There are boom and there are bust periods, but overall, the trajectory is up. And unlike a lot of other markets, the boom and busts in cryptocurrency are predictable. They rest around a key event that happens every 4 years, the Bitcoin halving. Now, a Bitcoin halving is when the rewards that the miners receive for mining Bitcoin are cut in half, reducing the supply. So reduced supply coupled with increased demand equals higher prices. And that's what we've seen historically happen every single time there is a Bitcoin halving. Okay? Every Bitcoin halving creates a new boom in price followed by a crash to a higher low. Now, the first Bitcoin halving took place on the 28th of November 2012. The miner rewards went from 50 Bitcoin to 25 Bitcoin. And the price of Bitcoin on that date, so the date on the 28th of November 2012, was $11.93. Now, a year later, on the 30th of November 2013, the price of Bitcoin had risen 9,673% to $1,166 per Bitcoin. Okay? Now, the next Bitcoin halving was the 9th of July 2016. So shortly after Alex released this video, there was the next Bitcoin halving. Okay, so the 9th of July 2016, the miner rewards went from 25 Bitcoin to 12.5 Bitcoin. And the price of Bitcoin on that date, so on the 9th of July 2016, was $630.37. 18 months later, on the 17th of December 2017, the price of Bitcoin had risen to $20,089 per Bitcoin. As I said, the next Bitcoin halving is taking place this year, May 2020, 13th of May 2020. So based on what you've seen so far, what do you think will happen to the price of Bitcoin? It's going to increase, right? Exactly. Now consider this. The previous Bitcoin halvings took place when the market was still immature, so it consisted primarily of just individual retail investors. This year, institutional money is in the mix. So you've got greater demand plus limited supply. Perfect storm. Now, in September 2019, Bakkt, which is owned by the Intercontinental Exchange, who are also owners of the New York Stock Exchange, they actually launched a Bitcoin exchange for institutions. Okay? And then, in November 2019, Fidelity Investments, so the fourth largest US money manager and broker, which manages $2.7 trillion in assets, received approval from the New York Department of Financial Services to begin offering crypto trading and custody to its clients in New York under Fidelity Digital Assets. Now, on top of that, in December 2019, the $1 trillion Dutch banking giant, ING, announced that it will allow its customers to store their cryptocurrency assets with the bank. Okay? And on top of that, on the 29th of November, Germany, the world's fourth largest economy, passed a bill allowing banks to sell and store cryptocurrencies for its customers. So starting this year, 2020, financial institutions in Germany will be able to offer cryptocurrencies, including Bitcoin, alongside traditional investments such as stocks and bonds. They can also provide crypto custody services to their customers. Then we have TD Ameritrade, who recently invested in ErisX to provide cryptocurrency spot contracts to their customers. Now, you may be saying, okay, great, well, there's increased demand, that's excellent. But why is that necessarily going to cause an increase in prices? Well, the difference between Bitcoin as a cryptocurrency, and actually all cryptocurrencies, and fiat money, so regular money like pound sterling, cedis, dollars, euros, is that there is a finite amount of Bitcoin and other cryptocurrencies. So in this case, there can only ever be 21 million Bitcoin in existence ever, period. It's not like money, traditional money, where the banks can just print more, or the government can just print more. That's not how it works. So there is a hard cap on how much can ever be in circulation, how many Bitcoin can ever exist. And then on top of that, we have all the added buy-side pressure coming from institutional investors that are coming in or entering the space. Okay? So by this point, you should be aware that you're basically living on the cusp of another boom. So what's the obvious move? Buy some Bitcoin and relax, right? And that would actually make perfect sense, unless you understand where the real money is being made, where the highest returns are being made. You see, the biggest returns aren't actually made from Bitcoin. They're made from the other cryptocurrencies, altcoins. Okay, so the last Bitcoin halving was the 9th of July, 2016. Okay? And on the 31st of December 2016, the price of Bitcoin was $956.60. Okay, now the data for this spreadsheet is actually coming live through an API. Okay, that's being taken from Nomics, which is a cryptocurrency data company. Okay, so this isn't my own data. This is coming live through their API. Now, the point I'm making is, as I said, on the 31st of December 2016, the price of Bitcoin was $956. Okay? At its all-time high, on the 16th of December 2017, the prices had increased 1,929% to $19,409 per Bitcoin. So it went from $956, right, per Bitcoin to $19,409 per Bitcoin. Okay? So 1,929% increase. Take a look at Dash, which is a privacy coin, so another cryptocurrency. Here you see a 12,000% increase, which means that every $1,000 that you invested in Bitcoin would have produced for you, at its all-time high, $20,290. But every $1,000 investment in Dash would have produced for you $120,518. Investment in Ethereum would have produced for you $174,000, over $174,000. $1,000 investment in Redcoin would have produced over $3 million. And a $1,000 investment in Verge, another privacy coin, would have produced over $13 million for you. So in total, a $10,000 investment on the 31st of December 2016, so shortly after the 9th of July Bitcoin halving, would have produced a profit of just under $21 million. So $20,858,679 from 10 grand. Now, the question is, out of over 3,000 different cryptocurrencies, okay, how do you pick the winners? Now, unless you're God, you can't. But through due diligence, extensive research, and experience, you can stack the odds in your favor. Look, I have a strategy, and it works. I've done the research, I've invested my own money to test it. I used it in October 2017 to turn a $20 investment in XRP into $800 within 3 months. It's the same strategy that I used in April 2018 to turn a £400 investment in PundiX to over $10,000 by June 2018. And it's the exact same strategy that, had I not sold early, would have turned a £250 investment that I made in Egretia in November 2018 into £73,164 by July 2019. And it's the same strategy we're going to use to make you money. I do the research to identify solid, undervalued cryptocurrencies, blockchain and infrastructure projects with real-world use cases, great ongoing technical development, an excellent executive team with a track record, and most importantly, an undervalued price. Now, of course, I can't predict the future, and not every investment is going to be a winner. So as a result, I split the money equally across several investments to diversify and reduce the risk. Then I wait. I wait until people are afraid, and I buy. And then I wait again for the price to recover. And then I wait again until people are greedy to sell. Now, as some of you know, I'm currently managing a portfolio of a very well-known, ultra-high net worth English entrepreneur. Strategy is already in place. The cryptocurrencies have already been bought. And although I can't reveal the names of the cryptocurrencies in the portfolio, I can give you a preview of the expected returns based on the previous all-time highs from 2017. So if you take a look at this spreadsheet, I've blocked out these two first columns here that tell you the names of the cryptos, but it is actually taking live data from Nomics. So you know that this is actually legitimate. And it's taking the all-time high directly through Nomics' API as well. So based on, let's say, $100,000 investment, you can see here that would generate, just by these cryptocurrencies going back to the all-time high of 2017, so not even exceeding it. And remember that historically, after a Bitcoin halving, the prices exceed the previous highs. So based on approximately $100,000 investment, you're looking at $3.4 million in return. And that's if it just returns to the all-time high profit. Okay, so the all-time high. Now, if it was to do half of that, to return to half the price of the all-time high, bearing in mind that historically, after Bitcoin halving, the price exceeds the previous high, then you still be looking at a profit on a 100K investment of 1.7 million. So, as I mentioned before, the May 2020 Bitcoin halving just around the corner, and we're on the cusp of a bigger boom.